Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, you could tell I'm already fired up. Today's video is brought to you by free. Yes, everything is free on my website when it comes to my spreadsheets. Had somebody comment below letting me know they really liked my total income tracker from last week's video. They wanted to know how much it costs. Well, it's all free. Go to my website, cptdashboard.com. Click free spreadsheets. They're all there. But today, we're going to talk about the poor man's covered call. I'm going to walk you through an entire trade. I'm going to show you a free spreadsheet. In fact, this spreadsheet is so worldwide, I've had this free spreadsheet downloaded over 100,000 times. Could you imagine that? If I charged just a mere $1? Well, I don't. I offer them up for free to keep you interested, keep you in the game, but more importantly, keep the numbers in front of us. So look, I want you to go to cptdashboard.com. I want you to sign up for the free newsletter and pick up your very own free copy of the Poor Man's Cover Call Tracker. We're going to talk a lot about the Poor Man's Cover Call setup, right? We're going to talk about how I worked through this trade and ultimately how I closed it. Now, if you're new to this channel, you need to understand this is all about cash flow. This is not a channel that just talks about the one-hit wonders and hope to get as many video clicks as I can. This is an experiment in retirement. Yes, this year in December, I retire from the 9 to 5. And over the past 5 years, I've been showing you how I'm preparing for retirement. But more importantly, how I'm trying to learn how to generate real cash flow, put money on the table so I don't have to work a 9 to 5 or take on a part-time job. I can use a portfolio, a laptop, and literally be anywhere in the world. I have traded the stock market in Copenhagen, Amsterdam, Paris. It doesn't matter. When you learn how to sell premium, you could be anywhere in the world, and it's fabulous. So look, that's what we do here. So before we get going, if you like anything you hear and you want to hear more, because I'm going to be bringing more and more videos as we get closer to December, because I'm starting to retire, and a lot of you know I'm going to do boot camps. We're going to do that one-on-one training to teach you how to generate real cash flow like I do. Now, I'm going to show you my numbers as well before we get to that A to B poor man's cover call trade. So if you like anything you hear today, I want you to subscribe to the channel. I come back every single week, show you timely and relevant selling premium trades so you can get ideas on how to put real cash flow on the table. And hey, look, I love how you cats are banging that like button. It does let me know you like what I'm doing. Now let's go ahead and jump right into this. This is my cash flow right now for June 2022. The stock market has absolutely been crushed. All of our positions are pretty much destroyed, right? So when we bought these positions higher, the stock market has fallen, but we're still generating cash flow. Look, we may have a portfolio that's down, but remember, the job of your selling premium portfolio is to keep putting money on the table. I would be a failure if both the stock market has been crushed and I haven't put food on the table. That would be absolutely emotionally crushing. I would have anxiety, depression, right? Feel like a loser. Those days are over. Now I have one job, and that job is laser focused. Put money on the table. We do not look at stocks from where we bought them and then decide when we're going to sell premium. We look at the stocks where they're at now and how they can put cash flow on the table. That's really how it is. I have owned stocks that have fallen 70%, but they still generate income. It's in the hopes, right? In the hopes that they come back as the stock market comes back. So that is the theme that I want you to take away from my videos. It's not about being down. It's about, are the stocks we're using generating cash flow? Now, we're not making as much cash flow as we did. That's why we need to be on top of our game and constantly in the game. How many people have I talked to recently that are absolutely out of the game? They're just giving up. And right now, the stock market's turning around. I've told you this from the beginning. If you disconnect from the stock market, you'll never get back in. This is what's going to happen. I'm going to tell you right now. Those of you that sold out completely, you have fear that it's going to fall again. See, I've heard those stories. I remember a guy telling me, look, he was preparing for retirement. And as the stock market's crashing in 2007, he couldn't deal with it. He's watching literal BMWs being ripped from his account every single day. And then, without any financial advice, without consulting a trusted friend or a mentor, he sold everything at the bottom. Now, that's okay if that's going to help him sleep at night. But with that comes ramifications, right? And what happens next is horrifying, because now the stock market starts to move higher and he doesn't believe it's going to go higher. So he misses the entire run-up and he loses everything, and then he misses the entire run-up. Look, I'm not telling you to stay in stocks for which you can't go to sleep at night. That's not what I'm saying. What I'm saying is make good decisions. That's the key here. Selling at the bottom. For me, there's only one or two good reasons to do that. And if it's just fear, that isn't good enough for me. And here we are at the bottom, and we've been treading water, doing what we have to do to generate money, income, cash. And we have. Now the market's starting to pick up. The news is coming out. Inflation isn't going to be as bad going forward. The markets love that certainty. That's what we've been talking about. The markets sell off when they don't have something to hold on to. No certainty, you get a stock market that sells off. Now we start to get certainty, and look what's happening. We get an 800-day on the Dow yesterday, and last week we rallied quite a bit. Now we got a long way to go. Don't get me wrong. And this could be a dead cat bounce, and we could test new lows. But here is the deal. If you're not in this game, then you're going to miss out. I'm going to tell you that right now. And right now, I'm prepared to make sure I'm a part of this. But at the end of the day, we need to put cash flow on the table. And as you can see, my June, we still have about 8 days left, probably about one trading week left. And we put 4,600 on the table. Now, 4,600 exceeds my goal for the month. We're going to move on. I'm now going to start placing trades for July. That's what we do in this game. We always look for the next trade as we close a trade. Again, if you're new to the selling premium, writing covered calls, selling cash secure puts, the poor man's covered call, understand there is a game that we play and it can be very profitable. Right now, I'm looking at some of these stocks that I've traded 10 times and generated thousands of dollars, even though I'm down, kicked in the ribs. I mean, 3M is one of my favorite examples. I bought it at 160. It's trading for like 140. I'm down 20 bucks. The buy and hold investor is absolutely feeling kicked, but yet I've generated 100 here, 300 there, 500 here. Next thing you know, 3M has rallied from 140 and is heading back to 160. Now, the buy and hold investor has been literally sitting on the bench, feeling kicked, feeling helpless. Me? I've been putting 350 bucks on the table every single month while I hold it. I collected a dividend for 350 bucks. This is what's beautiful about selling premium. Keeps you interested, keeps you upping your game, getting education. And I'll tell you what, building the cast iron stomach it takes to handle these swings in the stock market. I've always told you, man, you get your training, you get your experience. 1, 2, 3 trades, you won't need me anymore. So, hey, look, we're going to go ahead and talk about my Cisco poor man's covered call that I recently just closed yesterday. I'm going to show you the nuts and bolts of the trade. We're going to go from A to B, show you how it happened, why it happened, and why I closed it. Okay? So I want you to stick around. Go get that cup of coffee. I'll see you in one quick moment. Okay, so we're going to talk about the poor man's covered call, and I'll be quick and brief in the explanation. It's quite simple. Instead of buying the stock, we're going to buy a Leaps call option, giving us the ability to take somebody's shares away from them. So while we're writing near-term covered calls, we're able to have the ability to obtain shares lower, and we can trade near-term covered calls. It's like having leverage, but really, you're just using a Leaps call option to have the ability to call away somebody's shares in case you have your shares taken away in the near term. Now, the poor man's covered call is great because you only use a small amount of upfronted cash. In my example with Cisco, I would have needed at least $4,100 to buy 100 shares. Now, because I bought the Leaps call option, a deep in the money Leaps call option, I think I only paid like $16.90 or $1,690. So now when I write a near-term covered call for which I collect the real money as if I own own the shares, you can see how you can make more cash on cash percentage gain. People do this around the world. And I'll tell you what, there are many moving parts. I'm going to explain them today, but it's not rocket science. You stick with me, I'm going to show you exactly how I do mine and how we're profiting. Let's go ahead and look at this. I sent to the members, it's decision time. Now, what does that mean? For a lot of you that are newbies here, it is coming towards expiration. This means I bought the leaps. I wrote the 30-day covered call, and Cisco's now trading above my strike price. I have to make a decision. Remember, I don't own the shares. That means I'm going to have to execute on this trade. I'm going to have to close my near-term covered call trade and sell my leaps call option for a profit. If I don't do this, the brokerage will unravel this trade for me and give me the difference. Pending on your brokerage. My brokerage won't do that. They will give the call buyer the shares at the strike price. They'll debit my account, and come Monday, they're going to say, hey, pony up. So this is why you need to ask your brokerage how they handle a poor man's covered call trade. Now, you're kind of up to speed here on what happens. Let's go ahead and dig into the nuts and bolts as to why I picked Cisco and how this trade has worked out. Now, I'm going to mention what I wrote to the members. This is what the members get. They see the world through my eyes. Okay, I give 1 free month. This is an unbelievable, great opportunity for anybody out there that would love to have somebody look over their shoulder. A lot of people don't know that when you become a member, your email hits my inbox and it stays there and I answer your question. I know a lot of you out there are really apprehensive. You're sitting there wanting to get in the game. You don't want to make a mistake. I was there 5 years ago. So how cool would it be to sign up for a membership, get 1 free month, and be able to email somebody that has done thousands of trades, has made over $450,000 in that 5 years. It's on YouTube. I've shown it all. Look, at the end of the day, if what's holding you back is just the confidence to do it, to pay me like 49 cents a day, I'm telling you what, that's the best absolute value you find anywhere. And you get this kind of stuff. So let's go ahead and talk to this. 1 free month on my website, cptdashboard.com. Would love to welcome you aboard. Now, let's talk about this trade. It's decision time for me. The trade's about to end. I have to decide if I want to continue this trade. But let's back up for a moment. Let's go to my poor man's cover call tracker and see why I picked the leap that I bought and what was the thinking when I did it. Now, see, this is the kind of stuff you get with me, whether you're on my YouTube channel as a subscriber or a member. Look, I'm not just coming up here talking about some dude's trade back in December of last year. We're talking about relative trades that happened 30 days ago, and quite frankly, I put skin in the game. I did this trade. I sent this trade to the members. Now, if my members were lucky enough to take this trade, they too would have profited what I'm going to show you here. What we did was this. We liked that Cisco had announced earnings and the stock had fallen. Cisco is one of those great S&P type companies. They have a business that is absolutely rock solid. Now, they also have a dividend. Look, it fits all the golden rules of a covered call stock you want to buy. Instead of buying the shares, right, owning 100 shares, I wanted to do the poor man's covered call. So what I did was I went to my poor man's covered call initial trade setup, and we're going to set it up. Now I'm going to plug in the numbers, and the key here is we need to make sure our time value portion of the leaps option is as minimal as possible. That's the cost of the trade. The stock can go up, it can go down, the leaps will go up, it'll go down. Forget all the leverage nonsense. If we're buying a leaps call option that has minimal time value, it's as if we're buying the shares and we're only paying a little bit for them. That's the mindset here. See, I'm going to pay $16.95 for the right to take somebody's shares at 25 January 2023. Now, forget whether I make a nickel or not. At the end of the day, come January 2023, what's John going to do? He's going to take the share at 25. Unless Cisco falls below 25, the market maker will give me the shares at 25. Now, what I'm hoping for here is because of my 95 delta leap, that is so deep in the money, we're going to get two things here. One, the stock going below that 25 strike price probably won't happen. And two, the time value portion of this option is going to be so small, the cost, remember, time value equals cost. There's nothing to the cost. I can almost write a covered call and cover the time value cost in fees. It's nothing. And in this case, that's exactly what we're looking at. Look at the time value portion of my leaps. When I give this dude $16.95 to take the right to take his shares at 25 bucks, I pay him 7 cents. 7 cents. There is literally 7 cents of time value. I could find 7 cents in my couch right now. I am literally buying the right to take his shares from him at 25 for damn near real value. So, okay, I want you to keep that in mind. Because if I'm buying the shares for 41x, right, I'm buying them for 41x. In this case, I'm buying the leaps. I'm going to pick the 25 strike, and I'm only paying 7 cents more than what it would cost me to buy the shares outright. Now that's critical. That's very important because now as we use this leaps call option going forward, we're hoping it's not a one-off trade. At least I am. I like to spin my plates, man. I would love to have 3 or 4 near-term covered calls using this leap, then selling the leaps, we move on. Now, let's talk about this. My very first trade 30 days ago was going to bring me a very juicy return. I was going to pick the 43 strike. Remember, the stock's trading at 41. We're going to go ahead and we're going to collect $1.14 for that. We're writing a near-term covered call as if I own the shares, right? Now, for all you that are sitting back saying, oh my gosh, he's using leverage, I want you to rewind this video and think about what I said. What is the leverage here? What is the leverage here? The 7 cent cost in this trade? Remember, and this is where I think anybody who talks poor man cover call on YouTube, they never talk about the end result. What happens January 2023 when I have to take ownership of these shares at 25? What happened? Well, the market maker will make me pay 25 a share. They ain't gonna make me pay anything more than $25 a share. I already ponied up the $16.95 to have the right. Do you get it now? Come January, if I want to own these shares, I'm going to pay 25 bucks. What did I pay for that right? So for me, the poor man's covered call is one of my favorite trades. We're using leverage in such a positive way here. We're able to have a more diversified portfolio, right? Because if I pony up $41 a share for Cisco, that's $4,100. Now, if I'm only ponying up $1,695, I can go out and get another stock, maybe a Merck or a Bristol Myers, do the same thing. And we generate near-term covered call premiums as if I own the share. I do this with Gilead and 3M, where what I do is if I'm going to buy the stock outright, that equals X amount of money. Gilead was about $6,800. That's what it would have cost me to buy 100 shares. When I rolled Gilead through my initial trade setup, picking the correct delta, I was able to buy 3 leaps, and I was able to start writing 3 near-term covered calls, tripling my cash flow. Now, the first trade is going to actually profit me damn near 13%. Spoiler alert, it did. Here's how this trade works. Once I place this trade, I buy the leaps option. I now have the ability to write near-term covered calls. With that said, I then immediately write the 30-day covered call. And that's what I did here back then for the 43 strike. We write the covered call, we pocket the money. And if this trade plays out the way I want, and I have my leaps sold and the near-term covered call closed, we're going to make potentially 13%. Cash on cash. I paid $1,695 for this trade, and I'm going to make about $220. Cash on cash, 13% in 30 days. Let's go ahead and take a look at the chart here. Then I'm going to show you how this played out. Now look, 1 free month, 49 cents a day. Look, if you're out there and you got questions about this and you have nobody to turn to, man, just go get your 1 free month and ask me all the questions you want. People do it all the time. Look, I'm here to up your game, but you got to put skin in the game, right? People ask me all the time, hey, John, I got into this stock, that stock. What would you do? I tell them, chances are I'm in the same stock, and we have to battle our way out. We're not sitting there in a fetal position. You can't make cash flow when you do that. Come on. It's mindset. If you're going to roll with me, it's mindset, okay? Start changing your mindset. We need to be active and we need to be proactive, okay? You emailing me saying you're out of the game, I actually feel for you, man. That kind of touches me. I just wish I could grab those folks by the shoulder and say, look, nobody's coming to your rescue. And to be honest with you, I put my hand out there, and if you take it, you take it. And that's fabulous. I get those same stories back saying, John, you helped me. I tip my hat. Now, the members got this. They knew what was going to happen. I put out some different scenarios there, but the reality is simple. It's Wednesday, Thursday. I got to make a decision. I have to buy back my near-term covered call, and I'm going to go ahead and sell my Leaps option. I could have done this on Wednesday. Got too busy on Thursday, and next thing you know, it's Friday. They haven't taken my shares, and I have an opportunity now. Let me show you exactly what the stock has done since this trade started. Man, I cannot wait for somebody in the comments to say, bro, get to the trade. You say so much, yet you say nothing. Yeah, I love those comments. I love deleting them, and I love hiding you from the channel. We have no negative energy here because for every one of you, there's 100 others that absolutely take away from my video something, and that keeps me coming back. Do you understand? Look, here's what happened. Cisco absolutely trading sideways to lower because the market's falling. Earnings comes, it's crash city. Now, this is where I like to step in and look for those Leaps call options. Stocks getting crashed, call options are not pricey. I can get in cheap. I can find a Leaps call option that is not that expensive. Let's rewind the tape. What makes a Leaps call option expensive? It's time value. This is why you find the slow rolling S&P type companies. We don't use the high flyers because high flyers are going to have a lot of time value. And look, if you're not making your time value back in 2 trades, I'm not doing the trade. So for me, this is beautiful. This is where I want to be. Well, look what happened. At this moment right here, I'm able to buy that 25 strike. I'm able to actually only pay 7 cents. This is ridiculous. I can take control of somebody's shares and only pay 7 cents for that right. And we literally have 7 months to do this. I can write this cover call month over month over month. And again, my cost is 7 cents up front. This is a joke. I love it. Well, what happens here is Cisco trades sideways. We get a little spike in the stock market. Next thing you know, it is above my strike price. Well, we know what's going to happen. The call buyer is going to take my shares of 43 and they're going to make their profit. Well, now we have to consider unraveling the trade. I think right now you understand where we've been. Instead of buying the shares, I bought the Leaps. I paid less money. I ensured that using my poor man's covered call initial trade setup tracker had less than 1%. And it did. That's what I want to do. That's what I did. Now I'm going to immediately write the 30-day covered call. What I didn't mention back there was I like to use the 30 delta. So I'm going to buy the Leaps at the 95 delta because my time value is compressed. I'm not paying that much for the trade. But when I write the 30-day covered call, I want it to be the 30 delta. Now, in this case, I think I wrote the 40 delta because I was only paying 7 cents for the trade, right? So I kind of know I'm going to have my shares taken away. So now I got to be prepared. So as the stock is moving towards expiration, I know what's going to happen. It's going to poke above 43 and this trade is going to be over. No more spinning plates. Because here is the absolute jewel of the Nile of information with the poor man's covered call. This is a premium only trade. Okay? Premium only. If I buy this back right here and I actually end up paying money, creating a debit in my account, these past 30 days have not benefited me in cash flow. Now you could say, John, well, your Leaps value moved higher. That's a paper trade. That's nothing more than the buy and hold investor. My job is to put cash flow on the table. So if I buy this back right here and pay more money, then this means the cash flow for the month didn't happen. Now, yeah, it feels good that my Leap is higher and I'm going to make money, but that's not the goal. The goal of this trade is to make cash flow. So John's going to end this trade right now. I'm not going to buy the option back, pay more money, and then roll to the next month. Roll to the next month for what? Another $1? Then that's 60 days producing $1. My cash on cash percentage gain goes down. And what happens if old Cisco starts to peel back? That happens all the time. Stocks rocket and then they peel back. 60 days from now, what do I have in my hand? I literally am starting over. I have $1 in my pocket where I could have had the full 13%, moved on, and we're finding the next trade. So this is a premium trade only for John. This is why expiration is coming. I have to make a decision. Hope you understand that. Now let's talk about how this trade ended, and I'll break it down for you just so you understand it. Okay, so here it is. This is how the trade ends up. I did close out this trade. Now, what does a closeout mean? Close my near-term covered call. Okay, I'm going to buy back that 30-day covered call. Hopefully I don't have to pay anything for that. And in this case, I didn't. I'm going to sell my leaps. My leaps is going to be worth more. So this is where I start to make money. As you could see, I made $226 on this trade. Let's look at the breakdown of the leaps. I paid $16.95. I ended up selling it for $19.06. That's a 12.45% cash on cash. 30 days. You tell somebody that, they're coming to get me with handcuffs like Bernie Madoff. But there is the proof. Made $211 on that leaps. Now, when I bought it back, I ended up paying less for the buyback. Ended up making an additional $15. Remember, I got paid up front for that near-term covered call, like $1.15. I ended up buying it back, I think, for $1.10 or $1.09. So I ended up pocketing an additional $15. So in the end, this trade is closed. Okay, it's closed. I collect the difference and we move on. So in summary, here is my poor man's cover call tracker that I use for this Cisco trade. Now, this is the same exact tracker for the most part that you use. I've added some things here because I got to be quick, right? I got to put in a trade and send it to the member. So it's a little different looking than yours that you can download for free. Say it with me, cptdashboard.com, click free spreadsheets, get your very own copy. Got to keep the numbers in front of you, right? Jerry told me that years ago, and I created these free spreadsheets, and I want you to keep the numbers in front of you. So this trade is very simple. Went ahead and added all of my information about that leaps call option. Now, then I post in my near-term covered calls. Let me give you a sneak peek of what my square poor man's cover call tracker looks like. Notice how I enter every single trade. It keeps me on top of my numbers. Now, I haven't done a square poor man's cover call trade in about a month, so that value of the leaps option is not right. But when we place the trade, we're going to put in all of those numbers and see where we're at. Okay, so the poor man's cover call allows us to track multiple cover calls because that's ultimately the goal of the trade. We buy the leaps, we want to spin this sucker for as long as we can. Buying back our near-term cover calls, doing it again, right? Or letting them expire, doing again. Putting cash flow on the table as if I owned 100 shares. Now, as this video comes to a close, the way this trade ends is this. I end up buying back this option for $1.05. So I got paid about $1.20 for the initial 30-day covered call. I ended up buying it back on the day of expiration for $1.05. What that means is the stock was trading above 43 by essentially 4 cents. I hope you see that. That one extra penny is the time value. When we get on the final day of expiration, if your option is above your strike, it's going to have intrinsic value and time value. But because of time decay, it's probably going to be 1 penny in time decay or time value. So I end up buying this back. We end up profiting the $15. Now we're going to sell the option. When we plug in the $19.06, we end up making money on both legs of this trade. This isn't usually how it works out. Sometimes the stock rockets so high, I got to buy back, lose money on my 30-day call, but I make it back on the leaps. The reason, do you see that number right next to it? The reason is this leaps is a 95 delta, which means the leaps option moves 95% of a $1 move in the stock. That's why we want to buy those 95, 96, 97 deltas, because as the leap moves 95, 6, 7% of a $1 move, you're profiting as close as if you own the share. That's exactly what happens here. I end up making 13.3% cash on cash for 30 days with Cisco. Yes, Cisco had a horrible earnings, and we took advantage of that. The stock market has been getting clobbered, so it kind of proves that Cisco is one of those companies Wall Street likes. And it traded sideways to higher. It met my conservative strike price. We make money, and to be honest with you, I regretted this trade. I only did the 100 shares. I so wanted to do 3 contracts, and I would have made 3 times the money. 3 times $226. This would have been a trade that I would have hung on the wall. Absolutely love coming back every single week to share with you my stories and hearing how my videos up your game. Hey, look, thank you for watching. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.